In this video, I'm going to showcase an indicator known as breakout and retest signals by Algo Alpha. If you've been looking to trade based on breaks and retests, then this video is for you because we're going to go over what this indicator is and how you can use it in your trading. If you happen to find value, remember to leave a like. Let's get into it. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform that I'm going to be using. If you need to sign up, there's going to be a link in the video description for you to do that. Next, you want to load the 15-minute time frame of GBP JPY, and then you want to click on Indicators and type in Breakout and Retest, and it's going to be this one by Algo Alpha. Ladies and gentlemen, this is the all-powerful breakout and retest indicator. It's a tool designed to identify potential trading opportunities based on key pivot points, specifically focusing on breakouts and retests of historical swing highs and swing lows. It combines pivot point analysis with dynamic volatility and volume confirmation, providing traders with clear visualization of critical price action areas. As you can see, it's a super simple indicator, which is made up of the following components. First of all, we have support and resistance levels. This is a resistance level. It's printed in alignment with the swing highs or the resistance levels. On the other hand, a support level looks exactly like the resistance level. The only difference being it's going to be printed just under a support level. Now, looking at these levels, you can see they have three colors. The normal color is gray with a line marking the center of it. But then we have these two colors, green at the top and red at the bottom. The green at the top represents the buying volume, and the red at the bottom represents the selling volume. That volume actually represents the volume during the retest of a broken support or resistance level. Since this is a resistance level, the green area indicates the buying volume at the retest of the support level, and the red area indicates the volume during the retest of the resistance level. Now, just by looking at this, you can see it's represented visually as a ratio instead of actual numbers. Now, the difference between the buy and the sell volume is going to be represented as a delta, which is this number right here. For bullish retests of resistance levels, the delta is going to be represented in a green label like this. When the buy volume exceeds the sell volume, the delta value is going to be positive. But if the sell volume exceeds the buy volume, then the delta value is going to be negative. When using this indicator to trade for bullish break and retest entries like this one, you want to ensure that the delta value is positive because that would indicate that there are more buyers than sellers in the market during the retest. Now, for bearish retests that happen on support areas, the delta value is going to be represented in a red label like this one. And it's basically the same concept. If the selling volume exceeds the buying volume, the delta value is going to be positive. Conversely, if the buy volume exceeds the sell volume, the delta value is going to be negative. This means that while using this indicator to trade, you always want to make sure that the delta volume is positive to indicate that there are more sellers than buyers during the retest of a support level. Next, we're going to go over the settings of this indicator and see how customizable it can be. But before we do that, let's talk about Simple FX, which is the forex broker that I use for trading. It's fast, effective, and safe to trade with. Not only do they have a web and mobile application, but they also have a desktop application that you can just download and trade with. They have no minimum deposit, and they made sure to use only the charts from TradingView across all their trading platforms. Simple FX, as mentioned before, has a mobile application that allows you to trade wherever you are. They have 450 tradable instruments, including forex, commodities, indices, and equities. But what I love the most about Simple FX is that they give you a first deposit bonus of up to $5,000 and a 10% cashback. Now, to get access to the bonus as well as all the other perks, sign up to Simple FX using the link in the video description. Now, back to the video. This indicator is super customizable. As you can see in the settings, you can change the pivot detection period, which is just the number of bars to look back for identifying pivot points or these support and resistance levels. I'm going to leave mine at the default value. The confirmation multiplier is going to divide the main period by whatever number you put here, and it's going to use that result as a confirmation length before printing the signals. I'm going to increase this to 7. This is going to ensure that after a retest has occurred, the signal is going to be printed just one candle later, and I recommend you do the same. The swing point memory basically represents the number of recent swing points to keep in memory for analysis. The ATR length is basically the length of the average true range used for tolerance, and then here we have a multiplier of 2 as well. Basically, this is going to make the indicator smoother, and the higher this number is, the smoother it'll be. And then you can change the colors for bullish and bearish volumes respectively. The Style tab has several options that you can toggle on or off. After you've made your changes, click OK. Now, in order to use this indicator to trade by itself, the basic idea is for a long position, you identify a resistance level and then you wait for a break on the retest of that level, and then you take the position provided the delta volume is positive and exceeds a certain threshold, for example 1000. But obviously that would not be a good way of trading with this indicator, because we also need to be trading in the direction of the overall trend, which means we're gonna add a trend indicator known as 7EMA_5MA. This one by Storewise. Double click on it, and then on the Inputs tab, you want to change EMA1 length to 8, EMA2 to 13, and then 21 and 34. On the Style tab, you want to disable every single moving average option except for the first 4 options. After that, click OK. The way this indicator works is it identifies trends in the market using these 4 EMAs. A bullish trend is identified when all the 4 EMAs are aligned like this without touching, and the price is trading mostly above them. Conversely, a bearish trend is going to be the opposite. All the 4 EMAs should be lined up like this without touching, and the price trading below them. With these 2 indicators, these are the conditions for taking a long position. Condition number 1. Ensure there is a break and retest of the most recent resistance level within a bullish trend. What I mean by that is this. You can see this level represents the most recent break and retest of this resistance level. Now, to confirm the trend was bullish, you just take a look at the 4 EMAs beginning from the resistance level all the way to the entry candle. Between all the 4 EMAs, none of them should touch the other. They should be far apart like this. If any of these EMAs touches the other, the entry becomes invalid. Now, our last condition is to check the volume delta. It should be positive and at least 1000. Right now you can see it's positive and well above the 1000 limit, which basically means the buying pressure during the retest was high enough to push the price higher and higher. We take a long position. The stop loss can be placed either at the most recent swing low, which is under this candle, or if the candle were to be super small, you could also place it just under the resistance level. The take profit is going to be set at 1.5 times the risk, letting the trade run. And as you can see, ladies and gentlemen, the trade was profitable. Now, for a short position, it's going to be the opposite. You basically want to identify a bearish break and retest of the most recent support level, and that break and retest should be happening within a bearish trend. Right now, you can see if we look from the resistance level all the way to the entry candle, none of the 4 EMAs touched any other. They are far apart from each other, which makes this a valid bearish trend. The last condition is to take a look at the delta value. It should be positive and at least 1000. Right now you can see it's above the 1000 limit, which makes this a valid entry, because having it positive and above 1000 basically means that the number of sellers far exceeded that of buyers during the retest, which increases the probability that the price will go down. We enter a short position, stop loss above the most recent swing high. The take profit is going to be set at 1.5 times the risk, letting the trade run. And as you can see, the trade was profitable. In summary, the breakout and retest signals indicator by Algo Alpha combines sophisticated pivot point tracking, volatility control, and volume confirmations, enabling traders to reliably identify strong breakouts and retest setups. If you want to check out this indicator, you can find it on TradingView. Remember, the strategy showcased in this video is not financial advice. It's made up only of indicators. Go ahead and figure out what other price action concepts you can add to make the strategy even better. If you found value in this video, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.